Tesla stock never disappoints on a Tuesday. Some very big news to get into here in this video, so grab your brew, whatever you're drinking on this time. It's a Speedway coffee for me, and let's get straight into it. The first bit of good news comes to us from China. Tesla seeing 14,000 vehicle insurance registration numbers for last week. That is up 9.38% from the previous week's 12,800. And for context, Tesla China saw 10,600 insurance registrations in the week ending July 30th, 2023. So indeed, it looks like deliveries for China are ramping up again. According to Drive Tesla over on Twitter, a camouflage Project Highland Tesla Model 3 has been spotted in China's Xinjiang region. If recent reports are accurate, as of August 14th, Giga Shanghai is now only producing the new version of the Model 3 after a 2-week transition period. Launch soon? And tags Elon Musk. Unfortunately, Elon Musk did not respond. Third piece of breaking news, and the most exciting, I shall say, is Tesla's recruiting local operations team to bring FSD to China. According to this report, Tesla plans to form a local operations team of around 20 people initially to bring FSD to the Chinese market, according to local media. And Tesla knows exactly what they're doing. That's why yesterday, on August 14th, Tesla said in a statement that it had set up a data center in China and that all data generated from vehicles sold in China would be stored within the country. This is obviously a necessity to have FSD in China. Tesla needs to apply for a temporary license if it conducts FSD testing in Shanghai. And after 2 weeks of trial operation and approval by the local authorities, it can get a long-term testing qualification, the report said, citing people familiar with the matter. And it will take at least 3 months to get this qualification, the people said. On May 12th, a Shanghai official said the city would further deepen its cooperation with Tesla and promote the electric vehicle maker's business, including self-driving and robotics in Shanghai. This sparked widespread discussion at the time and was seen as a signal of Shanghai's support for FSD to enter China. On June 9th, CITIC securities analyst Lian Xing's team said the trend of Tesla's FSD engineering China has become clear, which is expected to accelerate the intelligence of local electric vehicles. In conclusion, however, this is still facing two major issues from becoming a reality: data collection qualification and supercomputing centers, according to the team. These issues will obviously get worked out in due time, but bringing FSD to China, could be a massive game changer for Tesla, and you need to know this as a Tesla stock investor. Given Tesla stock has fallen recently with all of this good news, it looks like the dip might not dip that much more. This news is actually massive and could be a big deal for Tesla stock. Obviously not today in this market environment where investors are more concerned about where margins are going to be next quarter and not so focused on where Tesla's business is going to be 2, 3, 4, 5 years from now. But the market psychology will change when the Fed does stop raising rates and once we get the first rate cut. Tesla has now unveiled a cheaper Model S and Model X with less range. The new standard range models are $10,000 cheaper, but software locked with less range. On Tesla's website, they now list the Model S standard range as well as the Model X standard range versions as well. Both are $10,000 less than the regular models on the website. The new Model S standard range starts at $78,490 and has a 320-mile range compared to 405 miles for the prior entry-level trim, now known just as the Model S. The Model X standard range starts at $88,490 and has 269 miles of range compared to the 348 miles for the regular Model X. I really like this latest move from Tesla because the Model S and the Model X are nowhere near as popular as the Model 3 or the Model Y. If they can boost sales for these higher end vehicles that have better profit margins, let's be honest, that's a very good thing for Tesla's business. And to introduce these slightly cheaper models could bring a whole new group of buyers to Tesla. Fisker on Tuesday announced that they would adopt the Tesla charging plug. The new charging ports will be standard on vehicles in 2025. Quote, the move will provide Fisker owners with additional charging options, taking advantage of Tesla's 12,000 supercharger stations in the US and Canada, reads part of the news release. All current and future Fisker vehicles will be covered by the agreement. I think it's important to put this into context. Why so many automakers are partnering with Tesla for their charging technology, and why this is a good thing for Tesla. Well, it's a good thing for Tesla because the government is giving out $7.5 billion for subsidies to build out EV infrastructure. Well, Tesla, to get a part of that $7.5 billion, is going to have to let other automakers use their charging technology. That means Tesla is going to probably get 80 to 90% of this money to build out more chargers. And that's good for Tesla's business. I think it's pretty straightforward. So it's a win-win for everyone involved. And it's a win for you as a Tesla shareholder because ultimately one day that will be a decent piece of revenue and profits for Tesla. And for your daily dose of the Cybertruck, we have another video, and this one is quite funny, so I'm gonna blow this up and let you guys listen to it. He tries to communicate with these two guys, and they were not about it at all. They didn't want to talk to him. Let's fast forward so we don't have to watch the whole thing.
What's up, man? Hey guys, yo, what's up? Say hello. Say hello, man. Ooh, turn around.
Yep, they wanted no part of that conversation. We are seeing 6 more Cybertrucks in Giga Texas parking lot that has this gray tarping over them. These are presumably, could be, vehicles ready for delivery. This adds to the 9 vehicles that we seen 2 days ago in the parking lot at Giga Texas. Well, look at this. A Cruise autonomous car almost ran over a mom and her 2 kids. We'll go ahead and let this clip roll through. Yep, that was pretty close. But as Holmar's catalog points out, notice how Dan O'Dowd doesn't speak about this because he actually doesn't care about safety of children. Which is interesting because I remember Dan O'Dowd on CNBC saying that Cruise and Waymo were far superior to Tesla. And these are just issues that you don't see anymore with full self-driving, yet Cruise is able to operate robotaxis freely on the streets. There's a problem here, and it's a good problem for Tesla. When Tesla does go to get their licensing, ultimately permitting, to do robotaxis and get state approval and city approval, it's probably going to be pretty easy if this is what Cruise is currently doing. The Motley Fool also says why a major AGI advance could be a big deal for Tesla. Some call AGI the holy grail of AI. If Tesla has indeed made a major AGI advance, it could be a big deal. The obvious benefit for Tesla is that AGI breakthrough could get the company much closer to its goal of cracking the robotaxi market wide open. ARK's invest bull case for the robotaxi market projects that Tesla could have a market cap of nearly $8 trillion by 2027. That's well over 10 times the company's size today. Tesla could also have a much larger opportunity with its semi-tractor EV trucks. If they could be fully autonomous as a result of key AGI advances, one of the biggest challenges for the trucking industry year in and year out is finding enough drivers. This article is in reference to this tweet that Elon Musk put out. He says, "I think we may have figured out some aspects of AGI. The car has a mind. Not an enormous mind, but a mind nonetheless." This tweet was put out August 7th of 2023, something we did cover here on the channel. We are also getting clearer pictures of the trolled Cybertruck wrapped as a Ford F-150. And it's a pretty good wrap. Tesla's stock at the time of recording this video is down about 2.5%. This is because the broader markets are moving down as well because of some of the economic data that came out last night with China that we covered last night, as well as some US economic data, which was not so good. But first, before we cover the broad market news, Vietnamese EV maker VinFast debuts on the Nasdaq after completing its SPAC merger. A SPAC deal with Black Spade valued VinFast at approximately $23 billion. VinFast, the automobile arm of Vietnamese conglomerate Vingroup, has so far imported about 2,100 of its EVs to the US from Vietnam and brought nearly 800 more to Canada. Beware, this company is not exactly cheap and is valued much, much higher than Tesla. So just be a little bit careful if you're speculating, trading, or investing in this company. SPACs don't have the best track record over the last 2 years. Let's get into the piece of positive news for the US today, and that is that retail sales increased 0.7% in July, better than expected as consumer spending is holding up. This is actually great news because inflation has been falling and the economy looks like it's doing okay. This is what you want to see. This is your soft landing. Inflation down, economy at least plateaued or rising. And recently we've actually seen the economy doing better than expected and actually growing around 2.5% so far in 2023. Soft landing looks more likely after this report. But homebuilder sentiment dropped sharply as mortgage rates surge over 7%. Builder sentiment dropped 6 points to 50 in August. Anything over 50 is considered positive, under 50 is considered negative. This has been one of the bright spots for the economy, is manufacturing, really of like building things, construction, has been doing well. And this is the biggest drop we've seen in a very long time. This is as mortgage rates hit 7.24% on Monday, according to Mortgage News Daily. The share of builders cutting prices rose to 25% in August from 22% in July, so a little bit more expensive to actually build. We've kind of seen this with even the last inflation report that we got. All of the inflation came from housing and rent prices. Without rent prices being and doing what they are, inflation would actually be negative. So keep that in mind. But the biggest piece of negative news for the markets that is causing the Nasdaq, S&P, Dow, Russell, all the indexes to fall about 1% across the board is Fitch warns it may be forced to downgrade dozens of banks, including JP Morgan Chase. Fitch Ratings cut its assessment of the banking industry's health in June, a move that analyst Chris Wolf said went largely unnoticed because it didn't trigger downgrades on banks. But another one-notch downgrade of the industry score from AA- to A+ would force Fitch to reevaluate ratings on each of the more than 70 U.S. banks it covers, Wolf told CNBC. If we were to move it to A+, then we would recalibrate all our financial measures and would probably translate into negative rating actions, Wolf said. This is having a negative effect on the markets today because Moodys just downgraded a lot of banks and warned of possible cuts to others. This was 1 week ago on August 8th, 2023. Moodys cut ratings of 10 banks by 1 notch and placed 6 banking giants, including Bank of New York Mellon, U.S. Bancorp, State Street, Truist Financial, on review for potential downgrades. The agency also changed its outlook to negative for 11 major lenders, including Capital One, Citizens Financial, and Fifth Third Bancorp. So this news just really does not look good for the banks. If the banks are not doing well, then it's hard for the economy to do well. After all, why are the banks doing so poorly and why do they need to be downgraded? That's the ultimate question, and that's the problem. We also seen some very big misses coming from the Chinese economic data last night at 10 p.m. We covered this for you, but if you missed that video, we'll go ahead and give you a quick recap. Industrial production year over year came in at 3.7%. You were expecting 4.7%, so pretty bad miss. Retail sales year over year came in at 2.5%. You were expecting 4.6%. That's a really bad miss. The unemployment rate is now at 5.3%, and it was expected at 5.2%. A miss as well. Fixed asset investment year to date, year over year, came in at 3.4%. You were expecting around 3.8%. Another miss. Now, China actually took out their 16 to 24-year-old unemployment figures, which the last we knew was at about 21%. So a lot of your youth is not employed in China, and this is a big problem for obvious reasons. And the fact they took out this statistic in the labor report really makes you turn your head and wonder how bad the situation is going to get, or why this is even happening in the first place. All of this has been bad news for the markets today. Now, another slight bright spot was Home Depot. Home Depot earnings were not great by any means, but they were not as bad as what they could have been. Year over year numbers down in the low single digits, 2%, 3% year over year for profits, for revenue, for same store sales. Actually, your average sale, your average order actually increased year over year, which shouldn't be too surprising considering we've seen inflation. But nonetheless, the Home Depot did not give the markets a reason for panic or worry. Now, Wednesday pre-market, so tomorrow, you're going to get Target and TJX. Target's obviously your big one you want to watch. They're the ones that have really gotten destroyed in 2023 and 2022. And depending on what they have to say will be very important. And then Walmart, Thursday in pre-market, is going to be your biggest company as far as retail earnings. And if retail earnings are bad, then it's hard to make the argument that the US will avoid a recession. And that's ultimately why stocks have been falling recently. Fears of a recession. As far as Tesla's option activity today, you have seen 506 institutional orders worth $176.27 million with a positive order value of 41%. So not that good. Tesla stock is down 2.67% at the time of recording this video, sitting right at pretty much the lows of the trading day yesterday at $233.37 per share. You briefly broke under 233 earlier, and then you got a bounce. So we'll see what happens. There is some time left of trading, but if this trend continues and the markets continue selling off, Tesla could very soon be at about $220 per share. The 100-day moving average is at $219.61 per share, and that's your next major level of support. But Tesla does not fall independently to the markets. So if the markets fall, Tesla's going to fall more than the markets. If the markets rise, Tesla is going to rise more than the markets. It's pretty simple, and that's what we're seeing happening. The Model S, the Model X, and the Cybertruck are all trending on X. S and X has 56,500 posts, while the Cybertruck has about 4,320 posts here on the day. So that is what you need to know here in this video if you're a Tesla investor or just an investor in the broader markets and you're wondering why the markets have fallen. It's bad data. Bad data out of China, not the greatest data out of the US, but still better than China. And the warning of downgrades coming to banks from Fitch. Those are really the three things that are affecting the markets today, which are also having an effect on Tesla. Hit the like button and subscribe to the channel if you made it to the end of this video. My name is Michael Tyler. Thank you for joining me today. Enjoy the rest of your day, and I will see you in the next one.